The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the November 5th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. Beliefs, they have the power to create and the power to destroy. You and we have that awesome ability to take any experience of our lives and create a meaning that either disempowers us, we don't want to do that, or one that can literally save our lives and empower us to places we never even dreamed of. Think about it like this. There's only one thing that you can control in life, and that is the meaning that you give to something. That's the beauty of the markets we trade. We've got bulls, we've got bears. We're going to go take a look at both of them today. One that sees an event as a selling opportunity, another a buying opportunity. Your beliefs, the meaning that you give to events, to statements, to anything, the meaning that you give to things in life, folks. You are the one in control of that meaning. When you really stop to think about it, it is very, very cool. Because what we can or cannot do, what we consider possible or impossible, it is rarely a function of our real capabilities. It's a function of our beliefs about who we are. And that matters because all personal breakthroughs begin with a change in beliefs. How do we change? I found the most effective way to change is to get our brain to associate massive pain, I mean massive pain, to that old disempowering belief. We must believe at the deepest level that that disempowering belief has cost us in our past, will continue to cost us in our future, and as well cost us here and now every single day. Sometimes knowing what we don't want is just as important as knowing what we do. My own personal belief is I think we need to know both. Because once we rid ourselves of that disempowering belief, guess what? We need to replace it. And we've got to replace it with the pleasure of adopting a new empowering belief. We must know, and this is so true, that in any moment, a decision that we make can and will change the course of our life forever. The very next person we stand behind in line, sit next to on an airplane, the very next phone call we make or take, the very next movie we see, book we read, page we turn, workshop we attend, investment we make in ourselves, any of these could be the single thing that causes the floodgates to open. And then all of the things we've been waiting for will fall into place. Well, let's go see how these markets are falling into place here. Right now, the Dow is trading down 78 points, trading out at 15,560. S&P is down 8 points at 1759. NASDAQ off 15 at 3921. Russell 2000 down 7 points at 1100. Our call number is 877 927-6648. Give me a call. Would love to hear from you. Be happy to take a look at your stock chart. We're going to have to start off, though, by taking a look at the ES Mini. Reason that we're doing that is we're paying attention to the 25-point consolidation that it is traveling in. We can see the ES Mini is in the extreme on the 30-minute chart. We use the 30-minute chart. It's really our EKG, or it's our ECG, the electrocardiogram, to help us get a feel for the heartbeat of what's going on out here. We can see here that the bottom of this consolidation range, the number we're going to really be paying attention to, is at 1748-ish, 1747 level. So far, what we have seen on the push down here by the Bears, they've shown up for work here this morning. The Bears have been able to get the ES Mini down to 1751.57. No, actually, I take that back. They've been able to get down to 1750.50. And at 1750.50, guess what? That's your .786 retracement from the swing point low. That's the one that came in 12:30 on Friday afternoon out there as price got down to 1747, all the way to a high that was put in here, which was your 0.618 retracement to the upside. That took place at 2:30 this morning as price got up to 1764. So we have seen a 0.786 retracement. What we have not seen here, we have not seen any bullish candle. In fact, what we have seen is really continuation candles to the downside. Your first continuation candle, well, that occurred here at 5 o'clock this morning. You got the confirmation of a continuation. We saw a close below the body of that candle. Well, you could really say that you got the confirmation of that signal here at 7 o'clock this morning. We saw that follow through. We saw price move down to not just the next level down, but 2 levels down on the elevator to the downside. We have not seen a bullish candle here yet. Of course, this 30-minute session will not close for another 18 minutes out there. And then we'll see. But what we should expect here is we should expect to see the market get down, and maybe it's where it's at right now because it's close enough to the bottom of the consolidation range here. But it should start to try to work off this condition by moving sideways, maybe bouncing higher. We'll see what it can actually do out here. But on the intraday chart, it's gotten into that extreme level out there, being oversold. That's what's going on the 30-minute chart here. As far as stocks popping and dropping in the marketplace, Regeneron Pharmaceuticals, that's the biggie to the upside, $13 and change. That's up about 5%. Endo Health Solutions, ENDP, up a nice 26% here this morning. Bofi Holdings, BOFI, that's up 12%. Intercontinental Ice, the exchange out here, that is up about 3%. You've got the Vitamin Shop, that's up 12%, but the Vitamin Shop needs a heck of a lot more vitamins. It needs, what's it going to need out there? Oh, it's going to need a lot because it's going into a huge downdraft. Rock, Tennessee, RKT, a little rocket ship that has now fizzled out. It's down 8% this morning. It's the leader in the clubhouse to the downside, down $8.59. Broadsoft, boy, it's having a tough morning, off 24% here as we speak. Polypore International, down 15%, off about $7. General Cable Corp, we didn't look at that one. BGC, we'll take a look at that. That's off 18%. Ashland Inc., down 7. Our call number is 877-927-6648. So let's go take a look at the indexes. Let's do our round trip around the world out here. Let's take a look at, first let's take a look at some of the strength areas here. Let's do that and see what we've got going. Well, the strength area certainly being the trannies. We pointed that out yesterday. The transports here completing now the 1 to 1.272. In fact, getting above the 1 to 1.272, breaking out above a resistance level here yesterday. We'll see if that will, in fact, hold. If we see the transports close back below 7064.67, it likely would indicate a false breakout. Otherwise, looks like right now it's tested that area. If it can hold 706.467, that's that little bearish engulfing. Don't think that was a key reversal session. That was the session that took place on the October the 30th out here. So far, the low 70.60.64, and that area is holding. So the transports we're going to want to pay attention to. That's one of the strong indexes out there. The other is the SOX. Now the SOX here not doing anything. So it's really just the transports in the marketplace. Let's go back now and let's take a look at the indexes. Let's start off by taking a look at the New York Stock Exchange. New York Stock Exchange here taking on its swing point from 2 trading sessions ago, November 1st. If we see it close below 9964.58 today, that'll set up a move down to 98.65. That's a 0.382 retracement level. But I suspect that what we really will see, where we'll get some information inside of the New York Stock Exchange, is going to be that May 22nd high. That's where we saw the a key reversal session, and then the market moved down into that June 24th low out here. Now, high of May 22nd, 969546. Looks to me like that's where the target is. That was a key reversal session. That went ahead, and that actually set off that little downslide out here. After the key reversal session inside the New York Stock Exchange, you had 2 sessions down, 1 session up. Interesting. If we take a look at the New York Stock Exchange after it made that 3 drive to a top and a key reversal session here on October 30th, we had 2 sessions down, 1 session up. Something to think about. that's on our NYSE. Looks like that is headed to at least the May 22nd level. Boy, and we'll take things one day at a time here. Looks to me like what we'll see is right around the middle of November, right around November 15th. I think November 17th might be the next full moon out there, would likely be the price target when a low, cycle low, would come into the marketplace. That's on our New York Stock Exchange. If we take a look at the S&P 500, number to be paying attention to most certainly is that 1750 area. We're not down there yet. 1758.40 is what it's traveling at. 1750 is that primary trading range boundary line on the monthly chart. We can see here that price is above that area. If that thing gets tagged a few times and holds, that one will make us say, something to think about, and that'll be something to think about to the upside. However, if we see it close below 1750, that brings into play 1726, more likely 1695, just your normal 0.618 retracement. That is on the S&P 500. On the Dow, well, we feature this one because this is the nice 1,000-point move that it has been in. Has not been able to break it to the upside. Next move down, 15,338, then 15,102, and if it can do that and it gets inside below 15,102, that's what will set up the rest of the move, the rest of that 1,000-point consolidation move to the downside. And, of course, if this thing breaks out to the upside, well, that's a whole different scenario. That's 1,000 points to the upside. So we can see where our backs are up against the wall or the market's backs are up against the wall. They're giving us plenty of information and data in order to be able to make decisions out here. If we go take a look at the Russell 2000, boy, that's giving away information. That has had some big downside moves out here. The Russell 2000 is the leader today in the clubhouse to the downside, off 0.7%, down about $7.80 right now, trading out at 1,100.43. Looks like yesterday may have just been a light volume bounce, setting up the C point of a small A to B equals CD. What does that look like? Well, if that's in fact the case, at key reversal session high on October 30th at 1123.26, that would be your A point. Your B point would be the low here on November 1st. That's out at 1087. Yesterday's high being the C point. That says 1072.86. But really what it wants to do, just like the New York Stock Exchange, it wants to come all the way back, and it wants to test this little breakout here from August the 5th out there. Looks like that's really where it is headed to, the 1070-ish area. That is on the Russell 2000. Of course, it's going to need some assistance here, and it has not gotten it yet. And that assistance is going to have to come from the NASDAQ Composite and the NDX 100. Still to date, this thing just traveling in a consolidation. How will it break the consolidation? Well, how will we know if it's broken the consolidation? That's even a better question. That's the one I should be asking myself. Well, when we see a close below this open window, that's when we'll know the consolidation pattern has broken. That open window, that's the October 17th high, 3863.49. The low of that window is 3882 out there. Natural area of support is going to be 3863. Otherwise, really just traveling in just small bodied, sideways, ranging motion out here. The composite is given some signals, but not a lot of follow-through to the downside. How about the old NDX 100? Well, guess what? Same real pattern out here. So the strength and the market, the only real strength that has broken down has been the Russell. The NDX, the NASDAQ Composite, they're the two holdouts right now. Dow's off 94, S&P is down about 10 points. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow still off about 90 points out here. Gold pulling back a little bit more. It's off $6 right now, trading out at $13.08. Silver flat down, and nickel. Light sweet crude pulling back almost 1% this morning. It's trading out at $93.70, down about 92 cents out here. Let's go check in on the ETF structure for the indexes out here. Let's start off by looking at the Dow Diamond. So moving down here this morning, taking out its most recent swing point, which was from 2 trading sessions ago, November the 1st. That has 5.9 million shares out there being tackled today already, with 1.5 million shares in the first hour of trading out here. So if it can close below that, that gives more potential to the downside move of 153.08. That's going to be your dead cat bounce, and is also going to be a test of that rising price channel out here, the one that takes us back into November 16th of 2012. So nice big consolidation pattern going on right now inside of the Dow Diamonds. Let's take a look at the Qs out here. Now the Qs here, give me a moment. The Qs here yesterday, so you can see really just the sideways range out here. And we take a look at the Qs. Now if we look at volume yesterday, I'm going to teach you something. How about this? Now there's different ways that each of us can use volume out here. The Qs specifically have something that is different about their volume behavior pattern than any of the other three ETFs out there, the Diamonds, the SPYs, and the IWM. Now, notice how this had volume yesterday of 16 million shares. One could take a look at it as being distribution at the high, so I'm not going to argue that. That's not really what I'm talking about here. I want to also take you back here to this high volume bar on October the 9th out here. October the 9th. That high volume bar, and not that that's not an area that might not be tested in the future, but high volume, and it was if you take a look at the bars going across the bottom of my screen out here, high volume bars inside of the Qs tend to be signals that form lows out there. Just like light volume highs tend to be signals that form highs out there. So whereas, as we take a look at the Qs, as we take a look at the Index 100, the NASDAQ Composite, and we can say that they haven't really given us much in the way of signals out here, other than just simply a tight range consolidation moves. What I can tell you is if you go back, and just this is as an example here, the October 9th area where you had volume crushing down and it was moving down, and you had big volume out there, that's actually not anything to fear. That's actually something to be able to use in your arsenal out here. In fact, when you see it close back above the top of those bars, that's really a signal that the market wants to actually move higher and that it put in a significant low out here. If we come all the way back into the time frame here, as the market was moving lower back in the June 24th time frame, you can see a nice high volume bar as well, as was making a low back on June 21st, June 24th. Got to close above that bar, and that was off to the races. If we come back and take a look at some of the other significant lows, take a look at this one right back here on the trading session of November 14th. It took two more trading sessions. November 16th as well was a pretty high volume bar out here, and so it's a little trick in my little arsenal. Take a look at this back here. How about remember when Europe was falling off the face of the earth out here? That was the big fear in the marketplace. That was back in the August 2011 time frame. Take a look at those high volume bars that were out there. They marked some pretty significant lows. Something to think about. Well, just the opposite. Now, I can't tell you why it works. In fact, I don't know why it works. I don't know if it's a fear thing and it's a way of portfolios that are hedging these days, and that becomes easy. I can't tell you what the reason, what the logic is. But I do know it works on the Qs. It doesn't work on the other ETFs out there. So when you see these abnormally high volume or low volume days, they actually have a ton of meaning behind them. And yesterday, without question, it was a Monday. It wasn't a holiday. It was a low-volume day out there inside of the Qs. And oftentimes, if you go back and you do the same thing, you'll see that those low-volume days oftentimes mark highs. Last time out here, if we just go back in the charts, I take you back to the low-volume day of August 5th. No holiday out there as well. August 5th, August 2nd, depends on which ETF you take a look at, had marked a swing point high out there. Now, there wasn't much of a pullback. There was some pullback. Came back into the trading session here, the high volume bar from May 22nd after it had broken out. That was a normal area of support once price broke above that area. But that's how you actually want to go ahead and use the volume on the Qs. And that, folks, was a gift. But give yourself a gift. Give your family a gift this year. When they ask you what is it that you want, in fact, I'd tell them now. Tell them to rush over to TFNN. It's our Tiger Dollar promotion. Have them invest in you so you can invest in them, folks. All the details on the homepage of TFNN.com. We've got the Dow off 81 points, gold down 6, silver down a nickel. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow is down 73, S&P off 8, and we're going back to the 30-minute chart here for the ES Mini. As we were coming into the opening of the show, you really pointed out that the market had just simply moved down to stretch the rubber band about as much as it could, needs to work off that oversold condition. That's really what we have going on right now. Now, isn't it cool to be able to utilize a set of tools that helps you identify where you should start to see a bit of a detour? Because, what the market is for the most part is nothing more than a rubber band that's stretching both to the upside and to the downside, and nothing could be more so truthful than as we take a look at this consolidation pattern that we've been watching here inside of the ES Mini. It's taking us back into the time frame of October 25th out here. So for several days, until this consolidation breaks to one side or the other, it's just a little bit of a tug of war that's going on now. And that tug of war right now, it is the bears that have the control here. And the key here is going to be whether or not the bulls can get above the close of this 10 o'clock session as we were coming and starting the show out here. That number is 1757 and a quarter. If, in fact, the bulls can garner some strength, well, that sets up a run maybe all the way back to the top of the consolidation range up to 1764. That's on the ES Mini. Certainly, if we take a look at from high to low out here on that rubber band stretch, 1758, 1761 would not be out of the question out here. But we've got the lines of demarcation. They are set up. That makes it pretty easy. What you want to be paying attention to, the hardest markets to make money in are consolidations. In fact, the key is being able to spot a consolidation as soon as you possibly can. And then once you identify that, then whatever it is that you would trade with, I would say you need to put that off to the side. And then if you're going to trade the consolidation patterns and be paying attention to those. Or just simply move off to the side, let the consolidation resolve itself one way or the other, and just simply pick up on that consolidation pattern when the market breaks one way or the other. But key here this morning is going to be, and whether it's, I'm not saying it's going to be during the next 24 minutes during this show, could be during Basil's show. It's Tuesday, could be during the options hour out here. But the oversold condition, we can see just using the EKG, the 14-period relative strength indicator was indicating that the market needed to work its way off from that condition. That's what we have going on here right now. To the extent of which it bounces, that I can't tell you. I can just identify the areas where we could see it move to. But the key here is going to be watching, and only one thing you got to watch right now, and that is the 30-minute candle from 10 o'clock here this morning. That's going to give us clues as to just what the market's next move will be. But the real next move is going to be a break of 1764 to the upside, or 1747-ish, 1748 to the downside. Now, let's go take a look here at, some of our core stocks, see what we've got going on. Speaking of consolidations, let's go take a look at Exxonmobil. Here is a beautiful 7-point consolidation pattern. It's going to try to bust its way up to the upside. The top of that consolidation, really the last time that it ran into some resistance, and it looks like it wants to go close that window. That's going to be the low of the trading session from July 31st, the low of which is 93.38. Volume on that break to the downside, was only 23 million shares, but yesterday moved up with 20 million shares. So far today, it's got volume of 6.3 million shares. Not too bad in a 1-hour period of time out here. Here's the 7-point consolidation range. Now, if in fact you see a failure, and the failure here would be a test of 93.38, because that's close enough to the top of the consolidation to close back below 93.38. That area is resistance, but we don't really have to worry about that area being resistance. It's really the top. It's really the black horizontal line going across our screen. That's really the resistance. That is the consolidation level out here. Positive for the market would be Exxonmobil. Positive for the energy sector would be Exxonmobil breaking through the consolidation level. If it can't bust it up, though, what will Exxonmobil do? It'll go and try to bust it down one more time. Remember, it's been in this consolidation pattern here since July of 2012, so no reason that it cannot continue to consolidate. That's what's going on with Exxonmobil. Let's go take a look at Microsoft. Microsoft has repaired the window. It was in a 4-point trading range. We can get rid of that as we speak here right now. 4-point trading range that maybe is trying to resolve itself to the upside. This here we saw Microsoft move down big, massive volume, 248 million shares. That window, though, has been repaired. We saw it gap up with 113 million shares, not taken out with volume. Right now you've got Microsoft trading above its most recent swing point high, which was July 16th. 36.43 was the number. You're trading at 36.47. Comparative volume at 36 million shares back there on July 16th. Today so far, 13 million shares. Not too shabby when you take a look at Microsoft. So if Microsoft is going to break this 4-point area, let's actually take Microsoft back on a weekly chart. Let's go see here's a larger consolidation pattern that it is breaking through out here. But it looks like Microsoft is going to go ahead and make a run for its 2007 high. And that's at 37.50. Of course, that's not its all-time high. You'd have to go back all the way here into 2000. And there you've got it priced out, splits the whole bit down up at the 59 level out here. So you can see a pretty significant area of resistance here. Now, if we take Microsoft back further on a weekly chart, we'll make this one a red line going across the screen. You can see that's the highs of November of 2007 out at 37.50. You've got a high just a bit higher out here, which would be June 29, 2001. 2001. That's right. You heard me. $38.08 out there. So that is on Microsoft. Boy, you see a big move above that level. That would be a breakout. You'd have to say that would be a long-term breakout, folks, because that takes us back to 2001 out there. How about that? Let's see here. What do we got inside our core holdings? Let's take a look here at Apple, see what Apple is doing. Apple given a big key reversal session, and since then has done nothing. That key reversal session taking place on October 29th, so no real readout here. It's got resistance most certainly at that high of October 29th. If it can take that high out, then the 1-to-1 A to B equals CD up that it has already confirmed would go ahead and transpire. That 1-to-1 A to B equals CD up inside of Apple would take price into the 572 area. Right now traded at 524.98, but it's going to have to clear. It's going to have to clear that hurdle, which is the October 29th high. That is at 539 and a quarter. What else do I have here? We got Intel. Let's take a look at Intel, see what it is doing. Intel completed its 1-to-1 A to B equals CD to the upside. Did that. It has now since pulled back. Let me make sure I've got all the proper volume here. Gapping down this morning, pulling back with 6 million shares out here. A normal retracement of any A to B equals CD pattern is your 0.618 retracement level. The dead cat bounce to 0.382 is where it's headed to. That's 23.65. So far, it's gotten to 23.77, but 22.98 would not be out of the cards. That would be a normal pullback. And so far, volume on the pullback, not too bad for Intel, INTC. Amazon, amazing Amazon. Even though it's trading off today, no big shakes out here. What we want to be paying attention to on Amazon is, could Amazon form an island reversal? It would be a doozy up here. Of course, this thing broke out, big volume. Don't know if that is a exhaustive move up here on Amazon. A island reversal that would form would suggest a yes, but we have not seen that here so far. We are taking a look at 12 million shares to the upside. The pullback so far has been light. 3 million shares, 2 trading sessions ago. Yesterday, only 1.9 million shares. So far today, it's done 633,000 shares to the downside. That is on amazing Amazon out here. IBM, let's go take a look at IBM. That's trading off here this morning. IBM found resistance at the consolidation low, the 181.10 area. We saw a nice move up. That was on the news that IBM was going to start buying its own stock back in the 170, 180-ish range out here. Pull back here this morning. 1.3 million shares. It made a high out here, and it's pulling back into that sign of strength, little sign of strength, that 8.9 million shares out here. So we could see IBM just kind of consolidate here between the 172-ish range to the 181 area out here. That's what's going on inside of IBM. Let's go take a look here at the commodity sector. Let's run through that for you. Gold. As we take a look at gold here, pulling back just a bit, 1309, but it looks like 1293. I would have to say 1274 is really where gold wants to pull back to. That's the bottom of the breakout session from October the 17th, and that might set up your next potential buying opportunity inside of that shiny gold metal out there. We take a look at silver here. Silver not doing too much here, really just another sideways day. But silver, below the this little uptrend channel that it had been traveling in. But really the larger term downtrend channel is what we want to be paying attention to inside of silver. It suggests that the move higher during this trading period of October 24th through October 30th was a false breakout of that trading range. Light sweet crude, that's getting back below. It looks like 93.82 was one of our targets. It's trading at 93.76. So far today, 93,000 contracts out here. If silver breaks this area, 91.31 would be its next target. That's your 0.786 level. However, broke into the consolidation range, and that really says, you know what, $85. The bottom of the consolidation that takes you all the way back into July of 2012 is really its target, especially if this Gartley buy pattern here fails. Let's take a look at bonds here. That's the weekly chart of bonds. Let's go take a look at the daily chart. Bonds here now breaking with conviction. Its most recent rising price channel out here. What does that set up for us? Well, it was the weekly chart that said lower price for sure. Right now, traveling inside the, trying to test the swing point from October 16th. So certainly a test of the low, 131.20 out there would likely be the next move out there. Let's take a look at natural gas. This thing has had a blowout, although it looks like today's candle here looks like it's trying to form a little bit of support, a hammer candle down at the low of $3.37. A lot of time left in the trading session out here. I would beware of that hammer candle with yesterday's gap down. That is inside natural gas. You can see it's in a strong downtrend channel out here. Those are the red lines. This is just the December contract that we're taking a look at here. It looks like it really wants to get lower. Broke that consolidation, says more likely about the $3.28-ish cents range, and that would be on natural gas. Question here inside the den to take a look at the New York Stock Exchange bounce from 0.786. Where does bounce take us to is the question. Well, if we go back and we take a look at the New York Stock Exchange out here, let me see if I get the question correct here. You're looking at a intraday time period. There we go. A 15-minute chart. Let me switch over to a different tab on my screen here. Let's do this. That's a weekly chart. Let me do this here. It'll be a little bit easier. NYA is the ticker symbol. Let's put this on a 15-minute chart. Give me a moment to pull that up. I got that time frame. I just know that I do. Let's get rid of that volume. It is not there. Okay, so we're taking a look at a 15-minute chart for the New York Stock Exchange here. Let me just update this, refresh my screen. Let's see what it is that we can identify here. Let this thing update. Takes just a moment. Right now, the Dow's trading off 59 points. The S&P is down about 6. There we go. Now we've got some better data. So the question is exactly what? Let me see here. Let me put this study on. Okay, so this morning it's done more than a 0.786 retracement, but you're probably looking at a larger term time frame out here. So the question is, hey, where is it that the New York Stock Exchange could bounce to? You know, you just have to take a look at today's opening range, I suppose, would be what I would look at here. So if we take a look at two different areas, the opening range, which is really just today, you're seeing that it hit the 0.618, that retracement level. That's really all that it necessarily needs to do, which was 1,007. So that would be one area that I would take a look at. Then it would come all the way down from the most recent swing point high to low. That was yesterday's close down to the low out here. See if we can find a convergence. So what we have seen so far is basically about a dead cat bounce of that area. The 0.382 level is at 1,011. We've seen a move up to 1,010. What I would do because I'm not sure how you're using the New York Stock Exchange because there's no ETF that you can really trade off of it. I would be more focused on the S&P 500. I would be more focused on the 30-minute ES chart, just to help as a guidance as to what is going on out here. And right now, we've got 12 minutes left in this trading session here. If the ES Mini closes above 1757.25, that's the high of that 10 a.m. session, then what that tells me is one of two things. If we go from high to low, that would say to me that 1758.84 would be the next bounce up. That's where it should find a little bit of resistance. And if it's coming in there with a decent volume, accelerating volume, let's see, so far here we made a low back at 10:30. That was with 173,000 contracts. Right now we're making a bounce with only 73,000 contracts. 12 minutes to go, though. Something to think about. 877-927-6648. Dow's off 55. S&P down 6. We'll be right back.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is off about 47 points. S&P is down 5 right now. Let's go check in on the Queen, the Euro U.S. dollar. If you were wondering where Mario Draghi is hanging out here, well, he's identified himself, or some bull has identified themselves out here, forming 2 hammer candles down around the same low area. The first hammer candle forming out here at midnight So Mario was up, maybe he had some of his friends up late for him. That set up a significant low. When I say significant low, a significant point to monitor is more likely what I should say. $1.3441 out there. That's the low that came in at midnight. We can see, the market here, this is a 120-minute chart. My apology that we are looking at out here. So it's a hammer candle on the 120-minute chart. You can see the euro here in that extreme sold condition needing to work its way off, and it really did that by a dismal bounce out there. Not very promising. We saw the bears rush back in, and right now, still trying to defend that area. Is another hammer candle. Now, this 120-minute time frame doesn't end for another hour and 5 minutes on my chart out here, so it looks like a hammer, smells like a hammer, but until you come back at the 12 noon time frame, won't know if this really turns out to be a hammer candle. But we can see the bulls at work here inside of the euro U.S. dollar, and that's on the 120-minute chart out here. If we go take a look at the daily chart, still just trying to get some legs. The daily is not sold, so it has room to run to the downside. And that room to run to the downside where it would give your next real signal would be, the question is this black horizontal line going across my screen here, is that going to be an area of support inside of the euro? That is an old area of resistance, and old resistance becomes new support. And not only does that become an area of support, you also have that wide-ranging bar from September the 18th out there coming through that area. If you get it closed back below there, then it will have failed. You'll see it move down to about 133.37. That is the beginning of the breakout session from September the 8th, and then we can go ahead and get rid of that line there because it will no longer be support nor resistance out there. It just simply will have failed and will not hold. So what are we paying attention to today? Well, again, as we came onto the air here at 10 o'clock this morning, we just simply were paying attention to the mere fact that the rubber band had stretched inside the ES Mini. We've got 4 minutes coming into the close here, but you can see we're now getting above the bar here, the trading session from 10 o'clock this morning. That high was 1757.25. You're trading at 1758 right now. It's already made the 0.6 minute retracement of this from high to low this morning. That tells you that the ES Mini, as it's working off that oversold condition, likely, in my experience, likely to make a run now for the highs again, 1763-ish, 1764. Certainly 1761 is a likely move inside of the ES Mini for a bounce out here. So still in a consolidation zone out here. Of course, the top of the consolidation starting to get nipped out right around the 1764, the low of the consolidation staying. It's as if you've got a consolidation within the consolidation, not to go ahead and to get you confused out here. Quick question, will I take a look at DSX? I most certainly will take a look at DSX for Angie in the den. Up nicely out here. This had been in a consolidation pattern as well, and my clients and I, we picked this thing up right at the bottom. Our level to come in was at 11.25. We picked it up right here on October 31st at 11.25. The low is 11.16 out there. So far, so good inside of Diana shipping out there. Folks, stay tuned. Basil Chapman is up next. Have a terrific Tuesday. I look forward to seeing you bright and early, first thing tomorrow morning. Have a great day, folks.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.